What's going on, everybody? Welcome back to Iron Digital. I'm your host, D Wills, and in today's video we're going to go over a few pieces of news articles. As you can see on my screen, I have the S&P cryptocurrency indices to cover over 240 coins. Cryptocurrencies are gaining more mainstream recognition as the S&P Dow Jones Indices, one of the world's leading index providers, announced that it will track a collection of over 240 cryptocurrencies with its own new cryptocurrency index. The new index, dubbed the S&P Cryptocurrency Broad Digital Market Index, will provide a snapshot of the broader cryptocurrency market's performance. The BDM is the latest expansion of the S&P was recently created collection of digital asset performance trackers dubbed the S&P Digital Market Indices. The BDM contains 4 subset indices that track various components of the crypto market, including the performance of top cryptocurrencies with large market caps, as well as overall market performance, excluding the top digital assets like Bitcoin and Ethereum. For more than a century, our indices have offered insight into how the markets are performing. Now, with the introduction of the S&P Cryptocurrency Broad Digital Market Index, we're providing that answer to cryptocurrency investors. The expansion of our digital market indices family gives one of the broadest snapshots yet of this rapidly growing asset class, with the ability to slice and dice by market cap. We're excited to bring this significant level of additional transparency to the cryptocurrency market. This is why we say watch what they do and not what they say. All right, because right now you see the markets tanking. You do see other negative news that's out here as well, and sometimes that negative news, because people are naturally drawn to negativity, that negative news will be the news that's put out there first, and people will draw attention to that more. But then you'll see news articles like this that should make the price go up, that should make people be bullish, and the price goes nowhere. Now, I know a lot of that has to do with the manipulation that exists in the market as well, but we can't leave out the fact that the novice level traders or the average investors is just not, like, they don't care about the logical information. They care about, their feelings. And so, when they look at the chart going down, it doesn't matter if they receive news like this, they're just going to have a negative sentiment, right? And so it's easy to fool the novice investors out of the market, even with good information like this, when the market is going down, because it's very difficult to be bullish when you see red candles on the chart representing the bear market. You know what I mean? But this right here, it shows adoption right before your eyes. Notice that it's little pieces of it's little pieces of information that's constantly being built up over time. It's steps. They're not doing big gigantic leaps, even though this is kind of a leap. But if you notice, it's just a bunch of steps that's being built up over time. You have PayPal that comes into the market, and they decide, okay, we're going to start doing Bitcoin and Ethereum and Litecoin, and we're going to start doing cryptocurrencies. And then you receive institutions start getting involved. There's small steps that's being added up over time. That's what's going to get you to your destination. So, positive news. Other news, we have on-chain data suggests Bitcoin will rise to $157,000 after weird pullback ends, analyst Willy Woo. I think this is from, I still didn't have a chance to look at this interview yet. Popular on-chain analyst Willy Woos says that Bitcoin is poised to hit the 6-digit price range once its retracement is over. Woo says in a new interview with Bitcoin bull Anthony Pompliano that based on chain data, he believes it's only a matter of time before the leading crypto asset kicks off the next phase of its bull market. He says, this is a bull market. There's no mistaking this. We've got X-ray vision on what the investors are doing, and it's bullish. While its price is sliding downwards. I think the next major event is when the fundamentals squeeze price action and we break out of this, what I'd call reaccumulation band, right in the middle of a bull market. Okay, he also says if we squeeze out of this accumulation band like I'm expecting, I would say that we will start curving upwards into the $250,000 to $350,000 range. Sounds a bit ludicrous right now, but that's what the model says. He also says, I'm not predicting waiting for some event in the end of the year. I'm more like using on-chain as a map to try and get a grasp of what exactly is happening in the market. I have no idea what's going to happen in the fourth quarter. Well, fourth quarter is definitely when markets move the most aggressive. Either that's going to be bullish or bearish, but the market is definitely going to move aggressive in the fourth quarter. It's not going to be squeezing or just a small accumulation by the time we get to October. It's just not going to happen. But as far as what he's saying, yeah, I mean, it's possible. It's possible for Bitcoin to get to $250,000 or $350,000. Possible to get to 157. I personally believe the market will get to at least 100. I don't know where it's going to get beyond that point. I don't know if it's going to get beyond 100,000, but my personal opinion is that the market will, or Bitcoin rather, will get to at least $100,000. Now, if the market were to get to 250 to 350,000, I believe a lot of that would just be from the leverage so it wouldn't be all exactly money coming into the market, but it would be people leveraging up. So if the market gets to $3-4 trillion, maybe $2-3 trillion of that, maybe $2 trillion of that will be non-debt, and the other trillion or $2 trillion would be considered debt, just because people are leveraging the market up. That's why when the markets crash, they crash really hard, but when they pump, they can pump hard as well. But again, because of the leverage positions that's being taken out, people, once the market hits a certain point, you get margin called, and then that puts further selling pressure on the prices, and the prices crash significantly. So, again, I don't know whether we'll hit 250 to 350,000, but again, I'll say it again, it's possible. In other news, we have Fidelity Digital grows crypto staff 70% to expand beyond Bitcoin. This is what I like to see. Finance giant Fidelity is beefing up its crypto unit to meet the growing institutional demand for altcoins. Fidelity Digital Assets, a crypto-focused arm of $10 trillion asset manager Fidelity Investments. $10 trillion. I believe there's like $700 trillion of global wealth. They've got $10 trillion locked up. That is crazy. Okay, they plan to add 100 new employees to its staff so it can meet the rapidly growing institutional demand for digital assets beyond Bitcoin. Last year was a real breakthrough for this space, given the interest in Bitcoin that accelerated when the pandemic started. Fidelity Digital Assets President Tom Jessup told Bloomberg yesterday, "We've seen more interest in Ether, so we want to be ahead of that demand." Up to this point, Fidelity Digital has been offering its clients only Bitcoin-related custody, trading, and other services. However, as the price of Bitcoin reached a new all-time high of around 63,000 and Ethereum broke above 4,300 earlier this year, institutional investors have turned their sights to altcoins as well. Bitcoin has been the entry for a lot of institutions. It's now really opening up a window on what else is going on in the space. Jessup explained, adding that both new and existing Fidelity customers have been showing a diversity of interest lately. For example, family offices and hedge funds made up the majority of Fidelity Digital's clients in the past, Jessup explained, but that list is expanding as various retirement advisors and corporations also want to hold cryptocurrencies as an asset. Okay, so it's like I said at the very beginning. Watch what they do, not what they say. Okay, this is what's being done right now. It's being expanded, 70% staff. And this is for the purpose of altcoins. This is purpose of expanding beyond Bitcoin. And so that's why I like to look at articles like this, especially, and bring that to people's attention, because the Bitcoin maxes out there will have you believe that Bitcoin is the way, the truth, the life, the everlasting. Bitcoin walks on water and everything else. Bitcoin is good, but Bitcoin is limited in what it can do. The blockchain technology is way more bigger than Bitcoin. You have to understand that. I'll say it again. Blockchain technology. This technology is bigger than Bitcoin. Bitcoin is good, and Bitcoin is praised because it laid the foundation, which is good. Always be thankful for that it laid the foundation. However, it's just limited in what it can do. It's being gold. It's the digital form of gold. It's the store of value. That's the best use case for Bitcoin. Trying to make it a day-to-day currency, bad idea. Bad idea. That's why with the El Salvador news, it's good news for the sentiment of the market. But honestly, like I said in that video, I'm not really a fan of Bitcoin being like a day-to-day type of currency at that level, acting as a fiat currency, because it's just not, the design is just not there to do it. Even on layer 2s, just the privacy aspect. And I know we have Taproot and everything like that, but in its current stage right now, it's just very difficult to do a lot more things with Bitcoin. And I'm a fan of Bitcoin, but just in comparison with all the other technologies that exist, Ethereum, Solana, Polkadot, Avalanche, Cosmos, Cardano, there's so many other projects out here that will dwarf Bitcoin. I mean, for goodness sake, Bitcoin uses proof of work consensus. None of these other chains out here is using proof of work. Everybody's moving to proof of stake or some type of consensus mechanism that doesn't use much energy. And the thing is, it's not Bitcoin's fault entirely. It's just that Bitcoin was the first. I made the analogy the other day when I was talking about iPhones and the first generation iPhone in comparison to the 10th or 11th generation iPhone. It's no comparison. You know, the 10th, 11th generation iPhone is way beyond the first generation. And it doesn't mean the first generation iPhone was bad at that time. It was good, but it's just technology is made to get better as time goes on. And so you have to be aware of that. And these institutions, they want access to these other projects that can actually help with business and infrastructure and make things more efficient. And they also want to get yield. They also want to make money. It's very difficult for Bitcoin to try to get to those hundreds of thousands, you know, when you see the market cap where it is. Now, we know that the market's going to be levered up, so it's not all going to be of, you know, just money. I mean, it's going to be a lot of debt in there as well. But still, if you're looking at that compared to Ethereum that has a lot more use case, or Cardano or Solana or any of those other chains, it's just the writing is on the wall. The opportunity is there. It's more in the altcoins than it is Bitcoin. Bitcoin is digital gold and it does well being gold, but let's be honest, digital gold does nothing. Gold doesn't do anything. I mean, let's look at the price of gold right now. Gold is sitting at 1827. There's no way where the M2 supply went up 22%, gold should only be sitting at 1827. There's no way, but gold doesn't do anything. I have gold jewelry. It's nice. I like to wear it. But it doesn't do anything. Bitcoin doesn't do anything. It's nice to preserve your wealth, but that's all it's going to do. I'm going to keep on saying it over and over again because, like I said, there are forces out there that are greater than mine, like Bitcoin maxis, who will make you feel that if you trade or if you're invested in anything beyond Bitcoin, then you're the cause of the problem with various things that's happening in the industry. And the fact is, you're not. Bitcoin maxis can be very toxic. Even I hate saying that word, but they can be very toxic. You got to be able to see that blockchain technology is way beyond Bitcoin. I want you guys to take a look at a video that I've seen 3 or 4 times. This blockchain technology explained. This came out, as you can see, 3 years ago by Coding Tech. This is a long video. This is 2 hours long. I've looked at this video 3 or 4 different times. This video was amazing on how it breaks down blockchain technology and its impact on the world. And guess what? That peer-to-peer acting as a currency, that's a very, very small segment of what this technology is capable of doing. Look at this whole entire video. I promise you will not regret it. This video goes into deep detail on as far as what this technology is going to bring in the future. Amazing video. It's been by far one of the best videos that I've ever seen. And I think I first seen it about a year or 2 ago. And like I said, I've watched about 3 or 4 times. Take a look at the video. But anyway, that's all I have for you guys today. I hope you enjoyed this video. Like the video, subscribe to the channel. I'll talk to you guys soon. Take it easy. Peace.